All right, everyone, let's kick this off. So welcome to this webinar. It's a risk settings update webinar. We're going to be holding these maybe around every 4 to 8 weeks, as and when we have more important data relevant to your hybrid trading to present. So today we're going to be presenting to the updated risk settings for Hawkeye, and also some pretty neat analyses that we have done that will make your experience hopefully more profitable and more stable in Signal Hive for those of you that are, of course, using the hybrid technology that we launched around 8 weeks ago. Sorry, 6 to 7 weeks ago. Before I proceed, I am required by the law to read you this disclaimer, so please bear with me. The contents of this material are for informational purposes only and do not constitute investment advice. Blue Sky Binary assumes no responsibility for any potential errors, inaccuracies, or omission in this material. Nothing in this communication contains or should be considered as containing investment advice or an investment recommendation or a solicitation for the purpose of purchase or sale of any financial instrument. Binary options trading may not be suitable for all investors as it carries a very high degree of risk to your capital. Trading such products is risky and you may lose all of your investment. Past performance is not indicative of future results. Poor fill rates, expiry times, market volatility, and platform errors could result in losing trades. Before deciding to invest in binary options, you should carefully consider your investment objectives, level of experience, and risk appetite. You should be aware of all the risks associated with foreign exchange and binary options trading and seek advice from an independent financial advisor if you have any doubts. The agenda for today is to give you a hybrid performance update for those of you that are using hybrid on FAT mode. That's fully automatic trading mode. This is the webinar focused to those of you, not for those of you that are using Signal Hive for manual trading. I will then also present the hybrid analytics section and construct a real-time Robo portfolio. Okay, so of all the robotic streams that are free, that are included in the subscription that you're paying per month, we're going to construct the ideal or handpick the ideal ones and also find the best Hawkeye risk settings for them. After that, I will spend a bit of time going over some of our human signal providers and how their hybrid FAT trading has done in the last year. And then I will end the webinar doing a very small mini case study on Mr. Saki, who is currently the best signal provider in Signal Hive. And I will, of course, finish off with a Q&A where you'll have the opportunity to ask me your questions. So this is a snapshot which is about 5 days old. Okay, so this is as of last Friday. See that 50% of hybrid FAT clients are on demo still, which is wise because the system is still being ironed out for bugs and it's still being stabilized and further improved. And 50% have already switched to live. All right, that's the rough distribution. This here is a distribution of client ITM since inception, which was in early January. We're now in March, and you will see that around 45% of clients are profitable, around 5 percentage points to 10 percentage points are break even, and then the red bit is the unprofitable clients. And what we want to do today is to give you risk settings recommendations. This is not investment advice, it's just recommendations based on real world binary.com data for the Robos. And hopefully you can use some of those settings then to have a more profitable experience in the future. So hybrid analytics, inside your hybrid section in your Hive unit, you now have a tab called hybrid analytics. All right, this is separate to the plain vanilla analytics that you see at the top of Hive. This is specifically inside your hybrid tab. This will show you the fully automatic trading, real world performance over time on binary.com accounts, whether it's virtual accounts or the real money ones for any human or robotic streams over the last year. Okay, since Hive launched June 1st, 2015, I believe it was, it's been around 8-9 months. It is what we would consider the truest depiction of performance of signals over time, because it includes the replication errors, the idiosyncrasies that happen when certain pairs are not available on binary.com, certain pairs that didn't exist but exist as of recent. All of this information is included. All right. Now, we will show you some of the performance of the human providers on Signal Hive and how that compares to their real-world performance if auto-traded using the hybrid technology we have. Now, there might be a big difference, and this does not mean that a signal provider with under 58% ITM, which is the break-even point, is not subscription worthy. That's not the point of this webinar. Tiki, for example, which generates monies for clients for over a year. He's been a long-term signal provider even before Signal Hive at BSB with his manual signals, is using splits, and his signals are used as indicators or what have you in his manual signals group, right? You can see inside Hybrid Analytics the efficiency of the Hawkeye engine as well. That's something I want to spend some time on in this webinar. We're actually going to go away from this PowerPoint and go inside Hybrid Analytics and take a look at not only how Hawkeye works, but how well it works for certain streams and how it's important for you to defer the investment decision to Hawkeye, whether to enter the trade or not, once the signal has been blast for certain streams in order to actually stand a chance of profitability. And I'll show you exactly how you would do that. The key is for you as clients that are using hybrid is to take a portfolio construction approach with low risk settings for all streams, right? Unless you have a stream that is so good, and there are one or two outliers where you can just go for extreme risk, it's better to err on the side of caution. And again, we'll do that just now, okay? So let me just exit this and log into the world of Signal Hive. Give me one moment. I hope all of you can see this screen pretty clearly. Okay. And let's go ahead and start with the Turbo, all right? The Turbo launched along with Signal Hive in June of last year. So I've put in June 1st as the inception date, and today we're at March 2nd. Just to remind you, this is not the Turbo manual win rate that you see on Hive. This is the actual real world, fully automatic traded win rate on binary.com, real money and virtual money accounts over the last year since Hive launched, okay? And immediately the two things that you see, firstly you'll see that if you let Turbo just run, right? It'll generate, roughly speaking, or it has been generating in the last 9 months, a win rate of 63.5%. And the break even for turbos is around 62%, 61.8%, because the payouts on those are lower because it's such a short term expiry signal. And you had around 224 wins and 129 losses. Okay, so immediately the inkling for the trader of Hive will be, okay, why don't I just set it on ER and let it run? Because it should generate, in theory, close to, if you add this up, 224 wins and 129 losses, you get, roughly speaking, 35 to 40 signals a month at a 64% win rate, right? That's almost too good to be true, and it is, and this is important here because this period here, the 63.5%, is over the entire observation period, right? Since last June until, well, last Friday. However, what if this is actually biased by data early on? Turbo did really well in June, July, August, September, October, and November, and then it kind of came undone in December, January, February, right? And 3 months of poor performance is something no client with any semblance of emotions can stomach, right? So what you want to do is actually find a risk setting, and mind you, this is mathematical proof right now, so pay close attention, of Hawkeye actually working. Notice as you scroll down from extreme risk to very high risk to HR to R to MR to subsequently lower risk settings, notice how the pie becomes greener and greener, right? With no risk being working almost perfectly. Obviously, it's only 12 replications in the last 9 months, right? So it's just a signal a month. You don't want that type of setting. That's very low risk. But you want to find a medium ground, a risk setting where Hawkeye helps you generate, in theory, money every month, right? Not every week. Every week is almost impossible for a stream. We're certainly trying to do that by reducing variance, but on a monthly basis, that's how performance should be viewed. So here's the thing. Let's go back to extreme risk, right? And with extreme risk, you'll see, okay, 224 wins, 129 losses over a 9-month period. That's around 30-40 signals a month at a 64% win rate. But let's shorten the observation period. Forget what happened last year. Let's look at what happened this year, right? Because this year you had the second flash China crash. So January 2016 until 2nd of March, that's today. Look what the ER setting would have done for you here. Your win rate would have dropped to 46.7%, right? Only 21 wins and 24 losses. That's obviously suboptimal, right? VHR wouldn't have really saved you. But what you see here is that HR would have done really well without a real significant drop in volume, right? There is a drop, it's about 50% or 40%, but you would have got 8 wins and 4 losses, which is 67% win rate, all right? And this is in a very tough period where Turbo, the manual Turbo, has been underperforming. Now let's see how HR, this high risk setting on Turbo, does through time. Let's go back, right? Let's not only look at the last 2 or 3 months, let's go back to June. Because what if HR came undone, right? You don't want that, okay, it didn't perform so well earlier on last year, but it performed well this year. You want something that performs well consistently. So I've basically changed the date range now from June, back to June till today. And notice that HR actually has been profitable also for the larger observation period with 64 wins and 37 losses, all right? If I add those two up, that's the total signal count, and I divide by the number of business days in this observation period, basically from last June until today, and I am basically getting around 11 signals a month. All right, don't quote me on that. It could be 8, it could be, it's roughly speaking around 10 to 11 signals a month. All right, so this is how the portfolio construction process begins. Right, this is the process of inquiry that you need to undertake as you are approaching Hive with a long-term view. Right, so you have to do this level of research. Really study each stream. So for Turbo, HR is what I would pick. All right, this is what the BSB team would pick. It does not mean that you need to pick this, right? Just to be clear, you can go for VHR or R or SMR. The point is here that Hawkeye works really well on the Turbo, okay? And so you can pick the stream that fits your risk settings. But when you have obvious gaps in performance, such as ER, it just failed last 3 months, you would not want to go for ER. You want to basically take the view that you're paying whatever subscription you have for Signal Hive Hybrid every month. Remember, Hybrid is free, right? Signal Hive is what you pay for. And we're giving you Robos. We're giving you pretty decent Robos, okay? They're not amazing, but they're not downright crap as well. But if you take those Robos, which don't cost you anything, right? They don't cost you anything incremental. If you have a turbo, you have a dive, you're not paying additional for the dive. Then you can actually go down the risk settings for each signal and just take the best of each. And you'll notice that it actually adds up in terms of signal count. I'll do the maths later with you, but let's move on. So for Turbo, we have HR. We have around 11 signals a month, okay? Take note of that. Now let's move to this baby Curve, right? Which has been a bit of a star recently. Some people are saying, you know, Curve is saving Hive and all of that. That's pretty interesting. Last year, Curve was a bit of a sick dog with Extreme. That is traditionally a sick dog month in and month out. So we obviously put that one out of its misery recently. But Curve has actually done pretty well recently, but we don't really care so much about recency, right? Recency bias is a big problem in statistical sampling. For those of you that look at distributions, Gaussian distributions, normal distributions, you know, it's a big problem. So let's not focus on recent performance, where Curve has just been off the charts. I think it was 78% win rate last month. Does Curve work, right? For an auto trader, for someone who is fully automatically trading Signal Hive. Does Curve work? On extreme risk, Curve works. Yeah, it's 58.9%. Let's round up to 59% win rate, which is kind of just a percentage point above the required break-even point to generate money on binary.com. So yeah, you would make a bit of money over time with ER. This is instant replication, right? But I'm not so comfortable with that personally. You can, of course, go for it, but Curve has some variance. Right, so you would need to stomach that variance, and the signal count is pretty high. 139 wins, 97 losses. Let's say that's around 240 signals delivered over a 9-month period. That is almost 30 signals a month, roughly speaking. Right, 25 to 30 signals a month. That is far too high. That is far too high for a free signal stream. Right, with a win rate which is not so high and has high variance. You remember from the Turbo. what did we select? We selected the HR setting and just 10 to 11 signals a month, right? So on curve, let's go down the risk profile, and you'll see that actually Hawkeye is not really helping curve. Okay, it doesn't really help curve, but on the VLR setting, it's pretty consistent. On the VLR specific setting, it actually lifts up the win rate of curve to 63%, which is decent for curve over time, with 24 wins and 14 losses. Okay, and if you add up 24 plus 14, roughly speaking, you're getting around 38 to 40 signals over this observation period, which is 9 months in your binary.com account. And if you divide by the number of business days, you're getting about 3 curves a month, all right, at the VLR setting, which seems to be the most optimal setting. Okay, so Hawkeye basically kicks in here and performs the best with the VLR conditions. So 3 signals, take a note of that for those of you that are taking notes. 3 signals a month on curve with VLR. And I'll be taking questions towards the end, so don't worry about that. So let's move on, okay? Extreme I'm going to skip, as I told you, that one has been deprecated. Let's move to core. Core is a bit of a workhorse. For those of you that have been around for over a year and a half, core has been firing, and it is a pretty powerful signal stream. Now what core does is it's finding short-term mean reversion opportunities, okay, typically off of S1 or R1, short-term resistance and support levels. It doesn't look at extreme mean reversion, okay? And so what happens with core is that I would say 7 out of 10 times, roughly 6.5 out of 10 times, it is right. That's why its win rate over time is around 67, 68%. But when core is wrong, it loses by a lot. What happens there is that the price breaks through the support and heads to the next support level, right? S2, or resistance, and heads to the next resistance point. Okay, you can play this to your advantage. We'll get to that in a bit. Let's go back to the simplicity of this analysis and look at core. So core on extreme risk is actually looking really good, right? I'm seeing here 174 wins, okay, 76% win rate, and 55 losses, okay? If I go down the risk spectrum, you'll see that actually the efficiency decreases somewhat, okay? But the key thing to note is, has core actually worked in the last 3 months, right? Let's do the same thing we did with turbo. We were tempted to go for ER with turbo, but then when we actually reduced the observation period to just January until today, January 2016, it didn't work so well, the turbo, right? ER failed. But with with core, what you see is from January until today, the win rate is actually higher than the long-term mean. It's actually 83% win rate with 24 signals, 24 wins, and 5 losses. Right? Remember, again, I'd like to remind you, this is actually real-world performance on your binary.com account. This isn't fictitious ITM or anything like this. This is the actual performance. So this is telling me that core, keep saying curve, core is actually a long-term stable stream. And at a frequency of around 174 wins plus 55, so around 230 signals over the 9-month period, core could give you anywhere from 20 to 25 signals a month. There are 22 business days in the month, right? We don't have signals on the weekends. So if you take 22 business days in the month, about a signal a day, that's roughly core's frequency. So let's pencil in 25 signals a month from core, okay? And we can leave it on the ER setting. Now here's something interesting about Hawkeye, and I'm going to show you this. With core, because it's not finding extremities in terms of major resistance points, right, like R3 or S3, it's actually trading mean reversion intra-channel. And what this means is that if the signal goes wrong, it will go wrong by a lot, which is why the lower you go on the risk settings, they actually fail. Do you see here, if you actually went for no risk, core becomes a reverse polarity signal. And we're going to use this later. We're actually going to give you the ability to reverse the polarity on certain signals, because the volume doesn't drop dramatically. It still remains statistically significant, so to put it, right? But this is the beauty, is that with certain streams like this one, and Tiki especially, we'll show you, you can reverse the signals at very low risk settings, okay? But this is for the topic of another webinar. But what we need to know for core right now is that ER is probably the best setting, if not VHR, one of these, all right? Let's go to Dive. Okay, so Dive has a very similar profile to Turbo. Okay, actually both are using very similar triggers. The algorithms of Dive and Turbo are quite similar. Dive has 2 additional filters, so to put it, right? That would immediately tell you that it would actually follow a very similar risk setting profile to Turbo, right? And also what it tells you is that Hawkeye works really well on Dive. And if you scroll down, you will see that as you reduce the risk settings, okay, and Hawkeye kicks in, you'll notice that the pie becomes more and more green, right? Largely speaking, you'll see. So it works really well, which means you should defer the investment decision, whether to go in to the signal or not, to the Hawkeye risk setting. And immediately you'll see here with Dive, you don't like the ER, it's 57%. That is pretty lackluster, it leaves a lot to be desired. With VHR, it's pretty decent, 63%. But as you can see here, Dive has a 68% win rate on an HR setting, all right, with 32 signals plus 15. So that's around, roughly speaking, 50 signals over a 9-month observation period. That'll give you around 5 signals a month. 5 signals a month coming from Dive at an HR setting, okay? So HR is the recommended setting for Dive. Again, I'd like to reiterate, this is not investment advice. You can go for R, you can use Hawkeye even more stringently. It's totally up to you. As you can see, it's working, right, through time. But the setting that we can go for here without sacrificing too much volume is the HR one for Dive. And let's go to the final Robo, which by the way is not live, so this is a very hypothetical discussion, but I know I'm going to get some of you excited here. This is a re-engineered variant of the tide signal. Some of you will know from the BSB dashboard. What you see here, by the way, it's called Pulse, pretty sexy name, is that it's very similar to the Turbo in its win rate. It's actually also a 5-minute signal, okay? But it does not fire off of extremities. It does not fire off of oversold or overbought levels, or outside Bollinger Band settings or anything like that. The code here is pretty unique. The pattern recognition behind this is pretty unique. And it's so unique that check out the volume differential, okay? So this is this is the 1st of June last year until now. Same observation period as Turbo. Same win rate as Turbo on extreme risk, on instant replication. But look at the signal count. 400 wins, 229 losses. Okay, I want you to process that for a moment. 400, 392 wins, 229 losses, compared to Turbo in the same observation period, similar win rate, but just 224 wins and 129 losses, right? So Pulse is similar stability, but at a dramatically higher win rate, which means a much higher profit multiple. Now, what we haven't shown you here is the equity curves. I'm going to show you the equity curve for Saki and for Pulse later on in the presentation, right? And soon we're going to build equity curves into these charts so that you can see the performance on your account equity over time. So you can also see parameters like drawdown, okay, and the Sharpe ratio of each signal stream as we beef out this analytics section. But for now, you have the required information here. Immediately you'll see with Pulse, this is actually a home run type of signal. The only problem is that there's a lot of variance in this signal. So you could have a week or 2 or even 3 weeks where it's not doing so well, but then it just does extremely well over the next few weeks, right? So what you want to do here is, because so far you've already constructed most of your portfolio in Robos, right? We went through Turbo, we found the best settings, or pretty good settings. Curve did the same, Core did the same, Dive it did the same. You don't really need more volume. You already have almost 40 signals a month, right? So with Pulse, go risk averse, right? Go really risk averse. Look, Hawkeye is doing its bit again. As you scroll down, it's actually becoming more and more efficient. Right? Look at these win rates, 92%, 80%, 92%. So with Pulse, we would recommend SMR, right? You get a 65% win rate with around 39 plus 21, around 60 signals, so around 6 signals a month. 5 or 6 signals a month. Pulse, SMR. All right? If we amalgamate everything we have done right now, okay? And by the way, I'm going to get back to Tiki and Opportunist and Mr. Saki and Bosca in the second part of the webinar. But for now, if we amalgamate everything we've discussed at the moment, and we go back to the presentation. One moment. This is how it looks. Okay, so take a moment to process this in. You can screenshot it if you will. Of course, this presentation is recorded, so it will be there in the video section of Hive. To your left, you'll see this is the Robo portfolio construction exercise we just did. Some of you were taking notes. I have them here in front of you. So we picked the turbo. We found that the HR setting was pretty good, and it would give you around 11 signals a month. What does that mean on a day-to-day basis? If you see 4 wins, you might only get 1. Probably if you've selected that, then you have to also stomach the fact that you're not going to be getting all the signals being replicated, right? So you get 11 signals from Turbo every month. Curve 3 at a setting of VLR. Core around 25 with a setting of ER. Dive around 5 signals with a setting of HR. And Pulse, what we just did 2 minutes ago, around 5 or 6 signals a month, which is with a setting of SMR. Okay, these are the risk settings. Total, you can expect around 50 replications, right? Not signals, but actual replications in your binary.com account. Okay, and if you look to the right, this is basically a pie chart of what you see to the left. This is roughly the volume distribution or volume contribution of these individual assets, if you want to call them that. Right? This is not capital allocation. Please do not view this as putting 50% of your money on core, because then we'll have one core going OTM, and then you all will say, thank you, core, for destroying my account, right? And we've had that before. So let's stay away from that. Let's understand these percentages actually as volume parameters, not capital allocation. Okay, capital allocation, we'll have there's a separate webinar on that, risk management. But before I move on to the next page, which actually is the meat of this webinar, because you all want to know, how would this Robo portfolio have performed in the last 9 months, right? That's what you all want to know. And I'll show you that in a minute. But before we do that, I want to run something by you. So I see some of you coming to us and saying, well, the costs keep adding up. You're charging us the current subscription, which is $50 a month. And then you're asking us to install a VPS, which is around $20 a month, 20 to 30. So already you're paying around $80, and then you're asking us to subscribe to Human Traders. I want to set the record straight here. No one here is asking you to subscribe to Human Traders. You can get 50 signals a month replicated in your binary.com account just from a smartly constructed Robo portfolio that it defers the investment decision of actually entering the signal or choosing not to enter the signal to the Hawkeye Risk Engine, which works, as we've proven to you based on the data. All right, and that would only cost you $50 a month, plus of course the VPS, because you want an uninterrupted connection. All right, the decision to go down the cost plus route and enhance your returns and your risk as well by subscribing to Human Traders is totally yours. We cannot stop you. And some of the Human Traders are fantastic, right? They're better than the Robos, but we're just letting you know that this is a risk-averse webinar, and therefore we're also keeping in mind your break-even, which is a direct function of your monthly costs of running this service. So what you're seeing here is this is your outlay, right? So to put it, your fixed costs. Everything else is just a buy-in or your actual capital allocation per signal, okay? And so how would this Robo portfolio have fared had you received this information and had Hybrid been a working product in June of last year when we launched Hive as a pure manual service? And this is what the next chart shows you. Okay, again, this is all real data. This is based on binary.com replication data. This is not just Hive Analytics, Hive ITM, theoretical or hypothetical results. To your left on the y-axis, you have the signal count per month, okay, starting from 0 all the way to 120. To your right, you have the win rate, which is just the ITM. On the x-axis, you have the month. This is June 2015. This is basically end of February, so this includes the entire February. I told you that in this robotic portfolio composition, you are getting around 50 signals a month, if you recall, based on the portfolio and volume construction process, right? So this matches very well also the real world results over the last 9 to 10 months since Hive is up, right? So let's take a look at June. June, you had 65 signals on that robotic composition at a win rate of 66%. July 2015, you had 62 signals, win rate spiked up to around 80%. August, tough summer month, you had just 55 signals. So I remember there was a drop in the amount of robotic signals. Win rate was around 65%. September, high volume, almost 100 signals that month, win rate 64%. October, November, December, 39, 38, and 33 signals respectively, with a win rate of 82, 76, and 67%. Now, January and February have been very tough months for the markets, but here's something interesting. Based on this robotic portfolio composition and Hawkeye Risk Engine settings, January would have been albeit a low volume month with just 40 signals, a 74% win rate month. February, 67% win rate with 48 signals. Okay. March, of course, we need to see what happens. And this is no guarantor of future performance. I just want to reiterate that. But this is basically including some months where you had very rough weather. And you can see that the robotic composition with Hawkeye, without Hawkeye, you would not get these rates. With Hawkeye, it has outperformed the markets dramatically. The reason I say dramatically is the red line is the binary.com win rate, break even, right? This is what we in finance call the hurdle rate. It's around 57.8% on binary.com. So there's a comfortable spread above that. All right. Now let's back out of this presentation and go back to so let's start with Tiki. Tiki is a popular signal provider who gives signals for over a year and are almost 9 months inside Hive itself. We're going to go back to June 1st until today. All right, June 1st of 2015 when Hive launched until today. And basically what you see here is that if you are going for ER settings, which is instant replication, you would have lost money with Tiki. 310 wins, 256 losses, 2 or 3 percentage points below the required break even. All right, and remember his signal is very similar to Core in the sense that he is not looking at larger time frames and taking a view that, okay, this is maxed out, this is a daily resistance R3 or daily support R3, price can't go much lower or higher than this. He's looking at intra-channel opportunities, and if they go wrong, they can go wrong considerably. What does that mean? That basically means that actually Hawkeye doesn't work for him. It actually works the inverse, similar to Core. As you go down the risk settings, you'll notice that the chart becomes more and more red. But therein lies the opportunity as well. So there are 2 bits of information you can deduce from this. The very simple bit is it may be risky to add Tiki to your FAT portfolio. Remember, we just constructed a robotic portfolio where you saw the performance. And adding Tiki may just introduce more variance, right? You may get a few wins, but you may get more losses, and you're seeing that the risk settings here are not really working on him. However, when we give you the capability to reverse the polarity on his signals, and that will happen at some point, then you can consider, okay, maybe with Tiki, I want to reverse the polarity when he's wrong, okay? When my LR or VLR or NR risk settings kick in, I'm going to reverse his signal. So if he gives a put and the price shoots up and it triggers an LR signal, it won't fire put again, it will actually go call, right? It will reverse the signal. And if you did that, your win rate would be 71% at a significant volume, might I add, right? Almost 10 signals a month, 10 to 15 on LR. 8 signals a month on VLR. And if you go for NR, which is a very, very low risk setting, you have a win rate of 81%, right? If you're reversing the polarity at a relatively significant volume, almost 6 signals a month from Tiki. At this moment, we don't give you the capability to reverse the polarity on these signals, but we will in the future. But for now, you can just take a look at Tiki and say, okay, I'm subscribed to Tiki. If he's actually adding value to your trading activities manually, then there's no reason to unsubscribe. You can continue it. But for those of you that are subscribed, looking at this and saying that, okay, I want to add him to my mix, then you may wish to reconsider, right? That's just something take into account. And we're adding, as we add a new signal provider, once we have the data, we of course add them to hybrid analytics, so you can run the same sort of analyses, right? So let's take a look at Opportunist. Opportunist has, it's an interesting one with humans, because emotions and structural improvement in trading routines and structural reduction in trading capability happens, right? I mean, we saw this with Bosca, we saw this with, there's so much more complex signal providers as opposed to robots. Robots, you can just, I won't say you can rely on it, but you can just construct a portfolio and you'll see pretty clinical performance through time. With humans, it's difficult because Opportunist is leading the charts in the last month, right? If you didn't know his previous performance, you'd say, wow, this is an incredible signal provider, because well, let's take a look at his performance since January. I think it should be better than his long-term performance, which is just 56% win rate on ER. January of this year, he's at 59%. So January, I guess he had a tough one. I think it was February where he got his act together. And there you have it. In February, in ER settings, he was actually relatively profitable. It was a tough month for markets, so he stood out, which is really good. But what you will see that over time, and this is what really matters, is this a portfolio candidate for a FAT client, right? For someone who has no time to be on Hive, someone who is fully automatically trading Hive on binary.com, or whichever other brokers we end up integrating. We're currently in talks with more. So, how does this actually pan out for Opportunist? Let's go back to the 1st of June last year and take a look at it until today. And with ER, doesn't really help. With VHR, kind of gets you to break even. But on HR, there is a glimmer of hope, 60% win rate, but then you need to decide if 60% win rate on HR or R is kind of doing its bidding for you, right? That's something you need to realize. That's something you need to work out. It's not an answer we can give you. And at no risk, which is just very few signals, you get a 63% win rate over time with him as well. And I think at LR 61. So again, you can kind of manipulate this how you like and choose what settings you like. But what it shows here is that, yeah, he is a candidate for FAT trading, but you have to go down the risk spectrum. Mr. Saki, we'll talk about him towards the end of the presentation, which we're nearing very soon. I don't think I need to show these win rates. He seems to work on almost all settings. We'll skip that and we'll just go to Bosca. So Bosca obviously had a great start in December, but then things kind of went downhill. Some reprieve this week, but time will of course tell if he's FAT worthy, so to put it. He has clients, and clients like him for the volume of his signals he gives in his private rooms with some education as well, and all those things. And all those things kind of add up. But again, strictly from a FAT standpoint, ER settings, you'll see with his very heavy volume, which is 238 wins, 204 losses, almost 400 or 500 signals. It's kind of noise in terms of binary.com replication. And if you go down the Hawkeye Risk settings, you kind of need to go all the way down to MR and SMR to extract value out of Bosca signals on a FAT basis. I keep saying FAT. For those of you that are new, FAT is fully automatic trading using binary.com, right? And if you go down again further to VLR and no risk settings, okay, you can get a decent win rate out of Bosca. Actually, I personally, if I were to be adding him, no risk is not a bad option, right? It's 18 signals, 11 losses in total. That gives us about 30 signals, okay? Over a period of 3 months. Bosca has been with Hive for 3 months, right? December, January, February. So that's around 10 signals a month at a win rate of 62%. if past is any indicator of future performance, which it isn't always. But that gives you some degree of a snapshot that, okay, Bosca, if you really go down the risk settings, is maybe a candidate for your portfolio for FAT. May not be, it's totally up to you, but certainly not at these these higher risk settings, right? It doesn't work. Going back to the presentation, we can now end this. So this is actually the equity curve, and when our programmers have some time, we're going to be creating these real-time equity curves on your hybrid analytics, so you can see the performance of a hypothetical account, a $100 account, over time for each stream for any date range that you choose. And you can see the number of signals, the signal frequency, and some interesting ratios like the Sharpe ratio and drawdown, right? All of which are very important to really get the true depiction of the risk-adjusted return profile of a stream. Okay, so variance parameters and all that stuff is taken into account when we're creating the stats that would go with these charts. But for now, you don't have these charts, but I've pulled two of them, and this is the real-world performance of Saki when automated. Right now, as you know, Saki has offered his services on ATP, where we liaise with a third-party technology provider called Signal Push, and that allows you to automate Saki signals into certain brokerages that connect to Signal Push. We also offer Saki as a hybrid FAT asset, so you can trade him on your binary.com account. And what you will see here is he actually joined Hive end of September. I think it was 24th or 25th of September 2015. So he's been with the firm October, November, December, January, February, around 5 months, right? So around 120 business days. Sorry, 105 business days roughly. And over this period, okay, he has blasted around, I think it was 580 signals. This is in totality. This is 580 signals have been blasted at a 77.1% win rate. However, his FAT replication results, which includes all the idiosyncrasies of brokers that are attached to hybrid, such as binary.com, where certain pairs are not available, certain expiries are not available, replication errors happen, that's only 205 signals. So 580 were blast, only 205 were really takeable. That's a replication efficiency of just 50%, which actually is not that bad. That's actually 2 signals a day replicated, right? So if he's firing 4 or 5 a day, 2 are actually replicated. And the binary.com win rate for Saki is actually 69.5% ITM at ER. And by ER, I mean extreme risk, right? So the tracking error, that's what we like to call it here internally, between the listed ITM that you see in analytics, right? The 77.1%, that's an inflated figure because it includes these signals that are fired on spikes at night, which are to some degree almost moronic. No one can actually take them, but they look pretty for the stats. However, if you actually look at his real world win rate, it's about 7 percentage points lower, so 69.5% win rate. And you'll also see something interesting is that you don't see too many periods of extended drawdown. Like this week, Saki has had a bad week, and he does, and it's happened before where you may get 5 to 10 days of poor performance, but this is the overall equity curve through time. Can you extrapolate this forward ad infinitum? Absolutely not. We could hit a next Lehman Brothers later this year, but what you can see is that overall he's a pretty stable signal provider and with very low drawdown through time. His ROI that we've computed is around 254%, assuming $30 trades per month. All right, 254% ROI on a $100 account. This is roughly what he delivered in the last 6 to 7 months that he's been with. 5 to 6 months that he's been with the firm. For those of you that are manually trading Saki, we have, I have to say, negotiated to some degree for him to give setups. So when he gives a setup, probably wise to get alert, pull that chart up that he's given a setup on, so that you can trade the setup if you have higher risk settings or higher risk parameters or higher risk appetite, or you can wait for him to fire the signal, wait for a better price. But those setups are there for that reason. By comparison, mind you, I just want you to process this chart. This is the equity curve of Saki. This is the equity curve of Pulse. And what you see here is also it's profitable, right? The ROI per calendar month is actually just 162%, where Saki is 254%. Part of that is because Saki has a much higher win rate, close to 70%. Again, this is binary.com results, both of them. And Pulse has a much lower win rate. Pulse actually has a 64% win rate, right, on ER. It has a much higher volume, but equally it also has higher variance. And you can see this variance in these periods of drawdown, right? For example, if you see my mouse cursor here, you have a slight drawdown here. You have an extended drawdown that almost lasted a month here. I think this was around August, September of last year. But Tide has really, this engineered version of Tide, Pulse, has really come into its own in these bad markets. Now, we don't understand why that is. It's almost acyclical to some degree, counter-cyclical, but it has really done phenomenal in the last 3-4 months, right? But Tide is a signal that if you're not careful, if you don't choose a low risk setting in your Hawkeye for FAT, you could experience these extended periods of where it kind of does nothing. You have great days followed by bad days. But if you're taking a long-term view on your investments, right, then you will see that it has a positive expectancy like Saki does as well.